Trade Live next week, we will get a much closer look at the mega cap tech trade when Alphabet, Apple, Meta, Microsoft and Amazon all report earnings. Alphabet has been the outperformer among those 5 stocks. The shares are up more than 35% this year, and Alphabet hit an all-time high today and reports earnings next Wednesday afternoon. So it's going to be a very, very busy week. Let's go inside out on Alphabet ahead of next week's earnings. Joining us now is Austin Lyons, Senior Analyst, Creative Strategies. Thank you so much for joining us today. Happy Friday to you, Austin. What are you expecting here for Alphabet?
Hey, morning, Sam. Happy Friday. So Alphabet's had a good quarter. They've been really turning it around. They were a little slow to figure out what is their generative AI strategy, but the last several quarters they've been able to continue to increase revenue, low teens, and their search is continuing to grow. And so I'm just still looking for continued momentum from Google. 90% of their revenue is ads. So can we see continued growth? At the size and scale they are, low teens growth is exceptional. Will we see continued growth? And then will they continue to tell us that generative AI is actually boosting their business and not hampering it? And then lastly, cloud. Google is winning in cloud, especially with generative AI, winning some of those new AI cloud customers. And so we'll want to continue to hear more there.
Okay, so plenty of metrics you're looking out for, particularly with regards to the composition of that revenue. No doubt, particularly on the ads front as well, given what we've heard from some of the other companies. I'm just wondering, we mentioned as far as the performance in the stock, I mean, it's been sort of outperforming. I'm just wondering, as it stacks up against its peers in this sector, we're going to be hearing from a number of other Mag 7 names next week. How it sort of compares, what you're going to be looking out for as far as Alphabet is concerned with regards to what the others say as well.
Yeah, how does Google, Alphabet compare to the other Mag 7? I think we're definitely in this generative AI phase right now. And you've got some people who are trying to monetize that. Tesla on one end is looking way forward with robotics and autonomy. On the other end, you've got Microsoft saying, how can we bring generative AI to our enterprise customers? And I think Google's in a really sweet spot where they are already using AI to bring advertisements to customers. They've got massive distribution. Generative AI helps their business, and it's very clear, cut and dry. And beyond that, Google just has all these infrastructure competitive advantages, from making their own hardware, their own software, to making their own AI models. And yes, I think the question is, who has AI priced in the most? But I think Google's price to earnings isn't crazy, and so I do feel like Google is a sweet spot in the Mag 7 where they can have continued opportunity to grow, even as challenges are out there, of course, with ChatGPT and OpenAI.
There's been some conversations recently about, whether the whole CapEx boom has peaked and, whether this will be the quarter of several to come where, you start to hear the street really questioning, show me proof of how you're monetizing from all of this, particularly with some of the CapEx numbers that they've been throwing out there over the previous quarters. I'm just wondering, if Google Alphabet is going to, be facing, some of that questioning in the market, or whether it's too soon.
That's a great question. Actually, there was some news just the other day that Anthropic has agreed to use up to 1 million Google TPUs, and TPUs are tensor processing units. These are like GPUs, but they're developed by Google for their own AI. And so I wouldn't be surprised to see Google continue to increase their CapEx as they're making more of these chips, not only for use internally for all of their 15 products that have over 1 billion monthly active users, but also for their cloud business to be able to rent them out to large AI lab players like Anthropic. Clearly demand for compute still outstrips supply, and Google's got this great business where they both can rent out their hardware and use their hardware for their own business. And so I would expect to see, I don't think that the first person to pull back on CapEx will be Google. I would expect them to continue to invest.
Good to know. Good to know. Just as far as other parts of the business, obviously it's just so diversified as far as their portfolio. What about YouTube? Just in light of what we've heard from Netflix earlier this week, I mean, their report card didn't look too bad if you take out that sort of idiosyncratic Brazil tax situation. What are you expecting there?
You know, the way I think about YouTube is people love content. And YouTube is a way to bring, of course, user-generated content, but also professional content to users. Google does an amazing job of understanding its customers and bringing the content they want. And interestingly, I think generative AI will continue to help in this world of creating content. Now, I'm not necessarily suggesting that we'll start watching generative AI videos, but if you think about the ads, for example, like I'm in the market for a pair of glasses, and if I'm watching a YouTube video and you're going to give me an ad, would it be crazy to have a picture or a video of me wearing the glasses instead of showing someone else wearing the glasses? So I think there's lots, I think generally everyone is loving video. You could say more, the early internet was all about text, and today's internet is really about video. Even if you look at like TikTok, for example. So I think YouTube has a sweet spot there, but I do think they have all sorts of fascinating product and revenue driving opportunities going forward with with VO3, their video model, for example.
Right. Okay, so in a couple of sweet spots there, looking ahead to Alphabet Google's report card late next week. Thank you so much, Austin Lyons, as always, the Senior Analyst, Creative Strategies. Appreciate your time. Let's trade it now with Alex Coffey, co-host of Next Gen Investing. Very good morning to you, Alex. Happy Friday. What's your first example trade for Alphabet? You're looking sort of neutral to bullish. What's the approach there?
Yeah, I kind of broke this into two different examples here, Sam. First one being a little bit shorter dated, expiring at the end of next week. More of a true earnings related trade. Neutral to bullish, as you said, and say you think the success that Alphabet's had will continue even through earnings. It's going to, maintain at least the $250 level. This is a strategy that could benefit from that. Selling the 250, 247.5 put vertical, looking to collect 75 cents. You would risk $175, a chance to make $75. So a little bit worse than a 2-to-1 risk reward. 249.25 would be the break even. So you got a little bit of a cushion, about $9 and some change, and you could still be profitable. So I always say, only a few things can happen, and only one of those situations is a negative one.
Okay, and give us a second example trade for this one, looking a little bit more bullish.
Yep, a little bit more bullish, a little bit longer dated. Goes out to the December expiration as sort of the anchor of this call calendar spread. Looking for a move to 300 basically by the end of the year. It's the December 19th, November 21st, 300 call calendar. Spending $2 debit for this, so you risk 200, but looking for a rally to about $200 or $300 a share by the end of the year.
Okay, a good look at Google Alphabet ahead of its earnings, and a couple of example trades for you there. It is sitting up at 2.5% in what is otherwise a nice rally for this Friday. Thank you so much, as always, Alex Coffey.